And what a lot of people don't understand why the private equity is moving into dental is if you and I started a company, Mark, like any company, it's a 95% failure rate.
Yeah,
like any
that's
company.
high. Yeah.
But if you start in dental, there's only like a 10% failure rate. Like, so you're flipping the whole model on its head, and it's a very, very safe place. If you're comfortable, you're not growing. All right, we are live for another episode of Dental Marketing Theory. And before we jump into today's show, please take a moment and go leave us a review. It takes you 3 seconds. We have thousands of listeners, but I only have about 50 reviews. And it doesn't matter what you're listening on. Any platform that you're listening on, you can go leave a review. You can give a thumbs up. You can even just push the little 5 stars or 1 stars if you hate us. I'm fine with that too. Just leave some kind of feedback. It really, really helps us. And today I have Mark Flock from Polaris, and I'm excited to talk to him because he comes from a world of banking. And actually, I don't want to steal your thunder, but you actually used to work with East West Bank with DeWalker, who's one of the founders of Polaris, and recently just had parents been on our podcast twice, and he's just one of the smartest guys that I know. And now you're working there, so you came over this year. So let's start with, why did you jump from the bank world and coming over and working with Polaris and helping dentists navigate the world of banking?
Yeah, that's a great question, Gary. I was in banking for roughly about 10, 11 years, working with dentists, a lot around the transition side of things. Really enjoyed it. I just kind of saw that industry being more of turning into a commodity. A lot of more banks kept coming out. In the last 10 years, it's been aggressive. And I also
Just in
realized,
dental you're referring to, or just in general, banks
just in
coming on?
dental, yeah, just in dental, but healthcare in general. When I was at PNC Bank prior to coming over here, I did everything when it came to working with dentists primarily, as well as medical doctors and veterinarians, as well as some pharmacists. So there was a lot. I mean, I saw healthcare as a whole, and all the different differences between the three, I guess, markets. Really enjoyed it. Really liked helping out clients, but I kind of realized 5% of what I did was more consultative, but it was about 95% of what I enjoyed most. So that's when I actually had contacts in the industry over the last 10, 12 years. Remain in contact with DeWalker Sinha, who was basically starting up Polaris at the time last year, and had some conversations with him, and it just was a perfect fit. And I kind of saw what they were looking to achieve, and the steps they were making in the industry, and it just seemed perfect because I really saw the DSO space, or the group practice space, really starting to blow up in the last 5 to 10 years, especially
Yeah.
really during COVID to some degree, and just saw the opportunity because it was really an underserved market, in my opinion, from a consulting perspective. And there's a lot of people out there that want to get into it, but they don't know where to start.
Hey, before we go any further in the show, I need you to visit a website for me, dentalmarketingmanager.com. If you're a dental office that has somebody managing some of your marketing internally, it's so important that you get them trained. And right now, there is no standard, there is no set of KPIs that people use to build out this position. And so it's been a little bit like the Wild Wild West, but we're aiming to change that. On December 8th and 9th of 2022, we are going to be hosting the first ever Dental Marketing Boot Camp, and we're going to be covering everything that there is to know about being a marketing manager, all the KPIs, how to partner with a marketing vendor, how to build out a position, how to get more patient referrals, 2023 plan calendared out, and everything that you're going to need to manage your dental marketing. And this is not something that you're going to want to miss if you are a marketing manager, and you're not going to want to have your team miss this if you have somebody helping you internally with your marketing. So we hope that you will come. A lot of the SMC clients are going to be there. And if you don't work with SMC, that's totally fine. We still want you there. We want to help you. We want to help your businesses grow. So go check us out, dentalmarketingmanager.com. We have limited space, limited opportunities, and we hope to see you there. Yeah, so let's work through that. So banking was turning into a commodity from the standpoint that there was more and more people serving the healthcare industries, especially in dental. So now you have, where before you might have been like this really specialized guy that can help grow with debt through the banks, and you can really be there to support them. Now everybody's kind of cutting each other's throats, and there's tons of competitors, and it really just becomes down to the commodity of not the relationship with the bank, but just you have a bazillion offers. If you don't want to do it, somebody else have 10 other offers to do that. What attracted you? You said, I know that the DSO is underserved. What exactly is underserved that attracted you, that drew you in to now work on the opposite end of that banking relationship?
Yeah, I think there's a lot of things. I mean, probably could talk 30 minutes about that to some degree. Is I like I said, I think a lot of people have an idea of what it looks like. You know, the pot of gold at the end of the rainbow, as they say, from a sell side perspective. They're hearing multiples that are being paid out, but there may be 3 to 5 locations to start with, and they want to get there. They may be in their 30s or 40s or even 50s, and they want to get there, but they just don't know where to start. They also hear about the landmines that a lot of their peers have fallen on accidentally. So, and that's where working with someone or having a partner, whether it's Polaris or another firm, to kind of help avoid a lot of those landmines before actually stepping on them and being $1 million or $200,000 mistake is what I really enjoy. Is more of the how can I help you avoid making those costly mistakes, and just watching your success as a business owner and just being an integral part early on in that process. Just
Yeah,
it
because
means a ton to me is
you lose
watching
some of
that
that in the
success.
banking world, right? Do you lose some? I've
Correct.
never worked in a
It's
bank,
very
but
transactional. Yeah.
so you're just
Yeah. Sorry.
following an SOP, right?
Yeah, and like I said, primarily I was in the business banking space, except for East West Bank. That was we did some DSO financing and we did a lot of education, at that role. But a lot of it's very transactional to some degree. And I know PNC did an excellent job of not necessarily making it transactional and offering the full package of ancillary services and really trying to help out with the operations. But when it comes to loans and banking, especially in that space, it comes down to rate, speed, approval details and structure. And it's really, like I said, I don't want to say it's a commodity, but it's turning into that a little bit, because there's so many lenders, and it's just becoming a. I mean, there's 30 banks that do what you want to do from a lending standpoint, but once you get to the group practice space, it then starts to change, and it changed drastically on what they need, why they need it, how fast they need it, the dollar amounts, and looking forward versus looking backwards from a financial perspective. So that's what that's what I really enjoy. That's what I've had a lot of experience in. I think Polaris does an excellent job in actually helping clients prepare for that
Yeah.
first and foremost, and help pull them along through the process, which can be very tedious at times because it's a whole nother space, in the middle
Yeah,
market
it's a
space
whole
looking
new
for
skill
lending.
set, right? It's a
Correct.
whole
Yep.
yeah, you go from just, hey, I need to get a little bit of money to open my practice or I need to buy a house, and then you start to scale and it's a totally different beast and totally different set of rules that you're playing by. So what are you said helping them navigate through some of these pain points that they just don't see, right? That you just don't know
Yeah.
about. What would you say are some of those pain points that people are dealing with on a regular basis that just catch people by surprise, and working with somebody like yourself, you're able to help them navigate?
Yeah, it's a great question, and it really depends on kind of what their situation they have today. Do they have a structure or a platform in place to scale up or to grow? If they don't, that's something they may need to invest in to start the process, because you don't want to create it 5 practices later and have to unwind everything and spend even more money and more time and effort trying to go backwards before they can go forward. So,
Hmm.
what a lot of doctors don't necessarily see, unfortunately, is that process, it could take 2 years, could take a year, could take 3 years, and a lot of times they're taking a pay cut in the first couple of years in order to do so. And that's something we help to educate them and show them what all that looks like, so they understand what they're getting into, what that pay cut may be to hire someone to take over their spot clinically in the chair, which is a kind of a big difference for them. It might be a $200,000, $150,000 hit initially plus added costs, but once they have that platform in place, they can then start scaling up, with the right lender and the right, guidance line and things like that to grow quickly. At the same time, I'm sure you've heard about it, and I've heard some of your podcast, associates right now, attracting and retaining associates is a big issue for these group practices trying to scale up. A lot of times they're running a particular location. So that's something where we try to get out in front of that, provide equity programs for associates and offer that
Yeah.
if that's a need. And that's something we'll be speaking at, and a lot of our speaking sessions are around that,
Yeah.
because that's a huge need,
It's the
and attracting
cornerstone of
talent and
everything, right?
retaining
If
it.
you don't have
Correct.
dentists, you
Yeah.
can't grow a dental practice. It's kind of hard.
Especially if they're producing $1 million a year, and you might make 150 $200,000 in EBITDA off that particular business for that person producing. That can be a big hit to the overall model if you lose two real quick. versus swooping them up, putting them in long-term contracts, and then creating a culture, which is another point. Culture can kill DSOs very quickly and can spread very quickly amongst the
And you
different
guys come in there and
locations.
fix all their culture for them, right? Like you go into the office and fix all their problems.
Not quite.
I'm
That's
just
a great
playing.
question. Wish we
Totally
could,
playing.
but
Yeah.
yeah, yeah, no, but that's part of, once again, not to go back with the strategic consulting and the leadership programs, really trying to figure out what's going to be the Achilles heel growing. Is it
Yep.
particular staff members? Is it operational items that are issues? Like I said, good culture. Another thing is a pitch deck. Sometimes when you're recruiting talent, or even if it's a hygienist
Yep.
or a different like an associate, it might be like having a pitch deck explaining to the person you're hiring why they should come work for you at
Yeah,
ABC
which is
Dental.
which is common everywhere
Yeah,
else, right? So in every other industry, this is like a common thing, but in dental, it's just we just now experienced this labor crunch, so it's like now everybody's kind of playing catch up, and I love that. I'm going to give you a horror story about banking, and I would love your thoughts on this of how prevalent it is. So I was just at a
perfect. I've
conference
probably seen them all.
recently. Okay, cool. So I was just at a conference recently, and I was talking to a doctor, and they were actually no, he was a DSO owner and turned consultant, and had a bunch of locations, sold them all, and now he consults. So he was walking me through what happened to him, and at one point they were getting credit lines from their bank, and their credit lines were great. They're a couple $1,000,000, and every time they opened up the practice, and they were doing de novos, I believe, and revenue started to come in, then they'd say, "Cool, we'll refresh your credit line, and you can open up another one or another two, and we'll do that to the moon and back." Right? And he was just like, "I'm never going to need private equity. I'm never going to need anything. I'm just going to keep scaling like this. It's so easy, and we have such a great relationship with our bank." And then their bank sold the notes to another bank, and I'm not going to say their names. And this other bank, he said, I'm convinced they didn't even know what they were buying, because when they got on the phone and we started explaining what we were doing, they were like, "We're not doing that anymore. We're not giving you any money anymore. We're actually going to start calling some of these notes, and we're redoing all the covenants that we had in our relationship with you," because they didn't care to move into dental. They just happened to buy some loans, and some of them were dental, I guess. So then he had a friend reach out to him who was a dentist who had multiple locations, and that friend said, "Hey, they're doing the same thing to me. I'm suing them." And the other guy said, "I can't sue them. I'm in this whole relationship with them, and I just need to figure out how to get out of it peacefully. I'm selling practices." The dentist actually ended up winning, and he got like some kind of sweet deal from the bank, from the judgment, and the other guy kind of had to just work his way out of it. In my head, I'm sitting there going, "Man, is this something that's like prevalent that happens?" Because that's scary if you have five practices and you have notes on all of them, and they can just sell it. And he loved his relationship. He was like, it was the best bank. We had the best relationship, but that person he had that relationship with just kind of didn't pull the rug on him, but the bank did. Is that common?
Um, like I said, I don't hear it too often, Gary. I'm sure it happens, probably more so than I hear about it. And that's where, like I said, working with an institution, getting everything in writing up front of the expectations of the covenants. And to your point, like I said, it is kind of set in stone. And if the customer wasn't doing their side of the things, the bank could come after them. So it sounds like he or she just flipped a script and went after the bank for changing the terms and things on the covenant. So I don't hear that too often. I do hear more often, though, where doctors, they'll be talking to their banker, and they'll say, "Yes, I got a word of mouth deal. Essentially, he or she's guaranteed I can continue to grow for the next 5 years with them. I can do X number of $1 million in lending per year." But the problem with that
Mm.
is that person doesn't make the decision at the end of the day. Someone behind the screens, the Wizard of Oz, and within the bank, which is usually an underwriter. Yeah.
So how do you know when you're safe? Like, how do you know that, hey, this is good? Like, how do you navigate that?
Yeah, and that's where, like I said, we actually work with clients to work with banks and institutions, financial institutions, to essentially get this all up front in writing, both on the essentially a refinance an entire amount of the debt, and then a lot of times what we look to achieve to get them is a guidance line of credit. And essentially what that is that it's their hunting license to go out, where there'd be a $5 million guidance facility or if it's a $10 million one, and it resets every year. But it's very specific to a set of guidelines that they must look at every time they look at a deal or de novo or an acquisition. They must look at that and fall within those metrics, and then they can move on it very quick versus having to go through the underwriting
Hmm.
and get a full reapproval, which is where someone could say no at the end of the day. So you know your
Yeah,
box.
but how do you protect yourself? How do you protect yourself against, like, what if a bank changes their mind that they don't want to work in dental anymore, or they sell it or whatever? Like, is there any protection against that, or is it just kind of like that's just the world that we live in?
Yeah, that's a great question. And I'm not sure if I have the answer, honestly, Gary, on that, because it's probably more of a legal question than anything, on the legality of the documents that were provided and things like that.
So you're recommending everybody just sue the banks? Is that what you're
It's-
saying? That's your legal
no,
recommendation?
because that can be
I'm
costly
just messing with
too.
you. I'm messing with you.
It just kind of depends.
Yeah.
I think in that instance, I personally would push back, have a conversation, see what you can get, come to a middle ground to some degree. And if you can't get that, you're more than welcome to give someone like us a call, because we have a Rolodex of well over 20 institutions that we work with that would gladly pick up a loan more times than not, take a look at it, do
Ah.
all of that, refinance it, put it on a structure that makes
So
more
there's
sense.
plenty of competitors to your initial point when we started. There's plenty of competitors out there. There's plenty of opportunities for banks wanting your business. So if someone says I don't want this anymore, someone else will take the deal more than likely.
More times than not, yes. It just depends. I mean, like I said, dentistry and dentists have one of the lowest default rates in the industry. I'm not just industry, just out of all the different industries,
In the
nation, yeah, in
world.
the world. So
Yeah.
a lot of banks want to work with them. The banks you hear about most in the space are usually more in the business banking space. So obviously you got some big ones out there like Bank of America. You got PNC Bank, Wells Fargo, Provide. Is now pretty large in what they're doing. You got TD Bank. A lot of banks out there doing this in the space. However, the space you work in for the type of clients we work with is completely different, and it's a lot of ones you may not hear of, but they have this niche within the dental industry, know exactly what they're looking for. And for us, we're looking at the covenants, to your point earlier, where we're less worried about rate and scaling up. 1% rate, 2% rate for a client that can move quickly on large deals and not get caught up with all the covenants and the legal ramifications of changes and switching organizations and things like that. When you do a restructure, we look at that to make sure it makes sense today, but not just today, but 10 years from now from what they want to achieve. So they don't get in that spot that you're talking about. And sometimes it's by chance, you can't avoid it. But like I said, all the clients we've helped with thus far, I have not heard of any situations where they ran into an issue other than when they brought an acquisition to the table that didn't fit the box they initially agreed upon. And that's really it.
Yeah. So yeah, throwing curveballs.
And
Yeah.
even
I mean,
then, that
late
institution
in the game.
might be able to still move forward with it. They just got to do a little bit more work to get okay with it.
Got it. And do you see, as because you got a lot of banks coming to the space, you have a lot of private equity, and what a lot of people don't understand why the private equity is moving into dental is, to your point earlier, if you and I started a
Mhm.
company, Mark, like any company of any stripe, it's a 95% failure rate,
Yeah,
like any
it's
company.
high. Yeah.
But if you start in dental, it's there's only like a 10% failure rate. Like, so you're flipping the whole model on its head, and it's a very, very safe place. And especially when there's a down economy, you tend to put your money where it's safer, not where it's more risky. So you have all these people running to dental. What are some things that people should think through before picking a partner like Polaris, but also picking the right bank to work with?
Yeah, that's a great question. Bank, like I said, same thing like we talked about before to some degree. Find one that fits your needs today and find one that fits your needs 5 years from now, to some degree, and get everything up in writing. Make sure
So you have to know where you're
you have
going,
to know
though.
where you're
You
going.
you you
Yep.
can't just be like, oh, we're just opening another practice, and you have to know. You have to have a vision and a game plan.
And that's the first thing we ask at Polaris. What are you looking to build? Why are you looking to build it? Where do you see yourself in 5 years? Because we need to
Hmm.
understand what that journey looks like, so we can kind of help create that path for you, to some degree. Because they might have a path in mind, but once we figure out the why, the what, and the when, we may have to offer some alternatives to that because it might not make sense, or speed up the process, or slow it down if it's just not scalable that quickly. So there's a lot of things we go into, and I think the why behind Polaris, honestly, is is the educational aspect. You mentioned it. You had Parent on the call a couple times. We do a lot of educational seminars. But I think the reason for that is we try to educate, the dentists out there on what to do, how to do it, where not to fail in a lot of cases. But we're basically an entire life cycle of being a group practice or DSO. We have products or services really to get you at each point of the stage. So a lot of
Hmm.
times it could be starting with what we call discovery day, having initial conversation, and you just don't know what you don't know, but you want to step in the face, step into the space, but you're just not sure where the failures are going to come and really how long it's going to take you to get there. We'll do a deep dive with you one on one for an entire day and tell you the good, bad, the ugly, and what that process looks like. And if you want to proceed with it, it may be talking about an associate equity program, which is kind of the early stages, setting something up to kind of help and attract and retain talent. It could be, like I said, we do the buy side advisory where we can actually look at as a consulting client, look at what they're looking to buy, make sure it makes sense, make sure it fits into your model. If we already know what your culture is like, make sure the culture fits in and understand why you're buying it, how it's going to actually boost your EBITDA and boost your valuation post sale, if at all. In some cases, one I had 2 weeks ago, I had to have a conversation with the client and said, this is actually going to take you backwards. Unfortunately, I know it looks great on paper, or not on paper, it looks great when you step foot in there, but from a cost perspective and from an EBITDA perspective, you have to make drastic changes just to break even at the end of the day after you hire an associate to replace a seller and so forth. So it just didn't make sense. And we helped to talk them out of it, at the end of the day versus making a costly $1 million mistake on a purchase. And then the strategic consulting, we don't want to be your forever consultant, at the end of the day. And his best way to put it is we try
Love
to
that.
come in from a leadership perspective and really show you from how to lead the team, where you want to go through all the numbers. We do a full blown evaluation to understand where you stand today, what's going to look like 5 years from now, and help you make those improvements along the way and look at the staff and pretty much everything from A to Z. And then we hope to step out in 12 to 18 months. We usually don't like to have consulting clients past 18 months because we want to teach you how to do it. And then a lot of times, once you get there in 12 to 18 months, we're helping you to backfill us with a COO or a CFO, of which we help get you in touch with people to do so. So, and help, look at that backfill at the end of the day. And then, with partnerships, I deal firsthand with partnerships transitions. So, have a handful I'm working on right now where it's one of them in particular. It's, two guys that went to college together. They want to merge forces together and create a group practice. One has a handful of locations, the other one has a handful of locations. What does that look like? And how does that sync up together? What is the ownership percentages? Doing all of that for them as a third party and making sure it's fair,
That's huge.
today, and then doing a complete restructure because then you have to look at the legal structure with an attorney and make sure it makes sense from a legal perspective, but also from a business lens. And that's where we come in and kind of earn our buck. Is we look at it from a business lens because the other client I'm working with had a great legal structure, great on
Hmm.
paper, but he's having issues growing and having issues bringing associates in, offering programs and things like that because the legal structure wasn't planned out 5 years out. It was planned out 2 years out. So that, and then like I said, the debt recapitalization, not going to go into too much detail there. That's where we really help clients get to the right lender is probably the best way to put it. Get them
Yeah.
the right line because there's a line of
Get
credit
the get
is
the
there's
people that are going to
yeah,
be able to support their vision. Yeah.
exactly.
Pairing that up.
Yep.
That's a great point. If someone wanted to reach out and work with you, what's the best way to get in touch with you?
Just reach out to me, email or phone number. Honestly, at the end of the day, just reach out and, like I said, we have a conversation. Love learning about the business, understanding what the struggles may be, understanding where you want to take that journey to the next step, and then we can kind of talk through, what all that looks like. I can provide some input. We can, like I said, I usually do it on a Zoom call, so you can kind of see me in person, have a conversation, and then, like I said, my goal is never to sign a client up right away. It's more so to truly understand their needs and then make sure it makes sense for them at the end of the day. I'd rather not sign someone up if it doesn't make sense and wait a year till they hear more podcasts from Polaris and learn more and really get to that spot where they feel comfortable proceeding to what they want to accomplish.
That's a great call out. So make sure you guys check out Polaris's podcast. Perrin does a great job on that. And Mark, I'm looking forward to seeing you at the event in just a couple weeks.
Yeah, absolutely. Look forward to having you there. And like I said, we have a great speaking session with a lot of great speakers coming up.
That's awesome. Thanks for coming on. I appreciate it.
Perfect. I appreciate it, Gary.